On to the big CNBC-TV18 KPMG mega pre-budget poll. Shireen Bhan now standing by to take us through some of the interesting findings of that mega survey. Shireen, over to you.
Tax us more, but not our companies. That is the clear message from India Inc. to the Finance Minister with just a few hours to go before the Union Budget is presented. CNBC-TV18, in partnership with Kpmg, has carried out an extensive pre-budget survey across India Inc. Now, nearly 300 senior finance professionals from over 15 sectors were polled with questions on their budget expectations. The results are revealing, to say the least. Here is the biggest revelation. 74% of the CEOs polled support additional measures on ultra-high income earners. 74% there. This is basically those who earn more than 5 crore rupees per annum. Only 26% are against any such measures. There is already a 15% surcharge on those earning more than 1 crore rupees. But let's now talk about corporate tax. A majority, that's nearly 55%, expect the government to cut the tax rate. Another 39% expect a status quo. Not just that, 80% of the CEOs polled expect personal income taxes to go down, with only 17% expecting income tax to remain unchanged. So again, a majority there believes that there is a cut coming as far as personal income tax is concerned. Of a majority of nearly 62% of CEOs polled expect the minimum alternate tax, or the MAT, to remain unchanged. Now, what do CEOs fear the most? 62% of India Inc. believes that long-term capital gains tax on equities has emerged as the biggest apprehension. Will this budget take it forward or not? That's the big question. The next question, has the government's measures provided tax certainty? Only 13% of India Inc. say the government measures have in fact provided tax certainty. Over 49% of India Inc. say the government has a long way to go in providing tax certainty. But at the same time, when asked if the tax environment has improved in the last 1 year, a majority, that's nearly 68% of the CEOs polled, said yes, there has been an improvement in the tax environment in the past year. 32% said no. Well, joining us now to discuss all of this is the team at KPMG behind this survey. Arun Kumar, the chairman and CEO of KPMG India, Sachin Menon, partner and head of indirect tax, and Hitesh Gajaria, who's also a partner at KPMG. Gentlemen, thanks very much for joining us here on CNBC-TV18. Mr. Arun Kumar, let me start by asking you about what is the biggest revelation as far as this CEO poll is concerned. Most CEOs, a majority of the CEOs polled, believe that there should be more measures to tax the ultra-rich, not so much on the companies, but on the ultra-rich. Our source is telling us that perhaps an inheritance tax or an estate tax is unlikely in this budget. But the poll seems to suggest that India Inc. is ready, even if that were to be the case.
I'm not sure that should be such a surprise, because around the world, you'll find that business leaders are in favor of taxation that's equitable, and having a higher tax rate on the ultra-rich is very much an equitable measure. So it's not so surprising to me that that was the result of the survey.
Okay, you're saying that that was not surprising to you, but Mr. Kumar, let me ask you, what if the government does decide to go in for any measures now to specifically target the ultra-rich? We've already got that surcharge on people with an annual income of more than 1 crore rupees. What is the expectation? Now, I would say, not an inheritance tax or an estate tax?
Yeah, on the expectation, I would leave that to my colleague Hitesh Gajaria to guess on that. But broadly, I would say that our survey showed that most people felt that personal taxes will stay the same or will decrease, with the exception of the ultra-rich as it was characterized.
Okay, Hitesh, so you want to take a stab at that? What would, if the poll is suggesting that people are bracing themselves for more measures, specifically when it comes to the ultra-rich, what are you expecting?
Well, we can take a leaf out of what UK did 2 years ago. They introduced a top rate of 50% on all incomes over a certain threshold. I believe that threshold was over £500,000. If the survey is anything to go by, then many people are expecting that those earning incomes of more than 5 crores could possibly end up paying a higher tax rate of not 30%, but say 40%.
Okay, so that's the expectation. Those with incomes of higher than 5 crores could end up with a higher tax on them. But, you know, Mr. Kumar, let me come back to you now and let me extrapolate this argument to what the poll is suggesting on the corporate tax front. And the expectation is, look what's happening in the US. India needs to move and reduce corporate taxes, and that was the stated objective and the promise made by this finance minister when he came to office. Majority still believe that the finance minister will cut the corporate tax rate down to 25%. In light of what we've seen from the economic survey and other commentary from the government, are you hopeful?
I believe I am hopeful because there are also international factors at play. For example, the Trump administration's decision to reduce corporate taxes significantly to 21% is going to be a competitive factor. So we are in competition for investment with other countries, including the United States. So in general, I believe that it is a competitive issue for us in India to address the corporate tax rate. Remember that the Indian companies will have to make decisions in terms of where they invest.
Yeah.
And clearly, India needs to be attractive for Indian companies to invest as well as for foreign companies. So today, a US company needs to decide whether they invest in India or decide in the US. The change in the corporate tax in the US, you know, tilts the advantage in many cases towards the US. So it's important for that issue to be addressed here.
The poll shows that people are very apprehensive about the introduction or a reintroduction of the long-term capital gains tax. But I ask you this in the context of what we saw from the chief economic advisor in the economic survey, talking about the possibility of a stall or a capital outflow from the Indian stock markets. One, because valuations are not justifiable. So do you believe that given where the markets are today, that we could expect any intervention by way of a long-term capital gains tax to upset the party, Mr. Kumar as well as Hitesh?
So my take on this is, my take on this is really that the government perhaps should not introduce this capital gains tax at this juncture. If we will see the last budget as well as I would expect in the current budget, disinvestment to take of proceeds to be a lion's share of revenue for the government. If it wants to keep its fiscal deficit in check, then perhaps this is not the appropriate time. Given that the market is good, the government has a golden opportunity for disinvestment, and the capital gains tax introduction at this time would just spoil the party.
Gentlemen, I now want to focus on what the survey shows up in terms of individual taxation. 93.3%, a whopping majority believe that there will be additional relief provided to individual taxpayers. Mr. Kumar, we are calling it the election budget here on CNBC-TV18. This is the last full budget ahead of the 2019 general elections. So the salaried class is expecting relief. What would your expectation be?
I would expect that at a time like this, the salaried class would expect relief, and that relief would probably be very good for the economy. More money in the pockets of the salaried class can keep the consumer spending up. So I would expect that to be a positive move for the economy.
Okay, Hitesh, let's talk about specifically what we can expect. Reintroduction of the standard deduction for salaried employees, about 22% believe that that is what we're likely to see. An increase in the income tax slab limits, 46% believe that that's what we could see. Increase in the maximum limit of income not to be considered taxable, about 32% believe that that could be what the budget provides. What would your best guess be, and what kind of changes do you anticipate?
So my best guess would be that the finance minister is more likely to increase the threshold slab rate of 2.5 lakhs, which has been there for quite some time. Yet another trend which I believe, though not apparent in the survey, is
to
that
3 lakhs? What would the expectation be? So 2.5 to 3?
Yes, 3 I think is a fair expectation, which would not also compromise interests of the revenue so much, but would really provide a feel-good factor. Okay. Secondly, ATC limit, the investment incentive exemption limit, you know, of 150,000 is now very, very old. Most investments now, including, you know, life insurance or let's say investment in mutual funds, etc., need to be incentivized. The provident fund rates also are going down in line with the general inflation. So I would expect even that to be substantially relooked at. Even there is a case to bring that up to 3 lakhs of rupees.
So that's a significant jump that you anticipate from 1.5 lakhs to 3 lakhs in terms of the ATC investment-linked incentives that you talk about. Any changes in the tax slabs that you anticipate?
So in the tax slabs, I would expect that if the wishes of possibly, or the anticipation of possibly a majority people come true, that is introduction of a, let's say, super high rate of tax on the super rich were to come through, then clearly there is a case to extend the 5% basic slab rate, which was introduced last year, to as high as, let's say, 10 lakhs of rupees, and then have a progressive increase in the tax rates going up over 10 lakhs.
What's the possibility of that? There's a lot of buzz around this theme and this idea, Hitesh. Would you think that they will bite this bullet?
Well, I think time is certainly right. If I were to just pause back a little, reflect back, today really the government in the demonetization move has rightly punished tax evaders. It did cause collateral harm, a bit of hardship to the average citizens. This is the final budget in which the government has to woo these taxpayers, these honest taxpayers, more salaried earners than anyone else, who will pledge their full support to the government, and therefore there has to be meaningful relief. Giving 10 or 15,000 here or there by way of some increase in limits, etc., is not really going to cut the cake. And therefore, I believe this is the time to redeem that pledge that the government is all for the honest taxpayer and is encouraging honest taxpayer behavior.
We're counting down to Budget 2018. Finance Minister Arun Jaitley will present the budget on the 1st of February, and you can catch the action right here on CNBC-TV18. We're going to be live through the day.
Well, thanks very much for that, Shireen.